Hey, everybody, it's Eddie in Tokyo, and I have a real special interview for you today. And we're going into a sector that is new for me. Well, it's new to a lot of retail investors because we've been kept out for a very long time. And this is the global trade market, which is projected to reach 10 trillion by 2027. And I have with me the CEO of Tradeteq, and it uses blockchain technology. And they are in a robust Liechtenstein legal infrastructure with lots of automation so that it reduces the friction, and they're using smart contracts. And you can participate. All you need is a working internet and a crypto wallet, and you can get into the digitized and fractionalized invoices of the global trade finance sector, and they become investable. This is an example. I'm telling you right here, right now, this is the world changing right before your very eyes. So welcome, Christoph Gugelmann of Tradeteq. I'm really happy you're here today. Please introduce yourself.
Thank you, Eri. I'm very happy to be with you today. So my background is really finance. I used to work in capital markets for large US investment banks for about 20 years in total. I've also spent some time in one of the largest commodity traders, and then finally got into asset management, and from there realized that a certain technology was missing in order to be able to access trade finance, and we'll come to that in a second. And that really led me and my co-founder then to build a technology company which is tackling this problem.
Yeah, it's good. And your background is super impressive. You were modest in that introduction. But if people check on your LinkedIn, the names of which you have been with in the past is really very impressive. So we should really kind of break it down quickly, because blockchain is interesting. You know, you get payment sector, you have your gaming, you have the finance, which is, you know, forms of farming and staking. And then of course you've got the emergence of NFTs, which are, you can't just call an NFT a one use case. There are many use cases for NFTs, and it's growing. And then you have music, and then you have CBDCs, which are the central bank digital currencies, and whether that's wholesale or retail. And so this blockchain technology is really solving a lot of problems, but we're going to focus on trade finance. So just explain to everybody, what is this sector? Because this is pretty new for the retail investor.
Yeah, it's true. Trade finance, though, is nothing new. You even had it in kind of like the Italian merchants. They started with trade finance, so it's not a new concept. But by and large, it's something we probably all familiar with. If you are selling a good to someone and you're providing payment terms of, let's say, 60 days, then that means you're not going to receive the money, although you have delivered the good, for 60 days. If you do need the money, however, you will be able to take that invoice from your buyer and go to a bank or a non-bank finance provider, such as a factoring company, and you will get a partial or kind of a discounted value of that invoice right then. That means someone else steps into that financing agreement and then obviously hopes that the buyer, your buyer, will eventually make that payment. And this is a massive, massive business. And if you look at kind of like everything which you touch, you use, you know, has been subject to trade and has been subject to finance. And the WTO, the World Trade Organization, estimates that about 80 to 90% of all transactions are subject to trade finance. So it's kind of hidden, but it's everywhere.
And it's been kind of a complicated business in the past, and it's mainly due to the time that people were waiting to be paid. So what you're saying is those invoices have value, and people have been leveraging loans or short-term, some sort of investment finance instrument against those payables, right? And so now what you're going to do is you're going to bring this concept but using smart contracts. And then I think you also have a pain point that you're solving with a token, right?
Yeah, so there's actually quite a few pain points. Trade finance per se has been overwhelmingly financed by large banks, and in fact only by a few banks. So if you look at kind of the total market, and you mentioned the 10 trillion, I think that's the projection for 2025 or so. So yeah, pretty much 60% or so of that volume is funded by 25 large banks. So it's very, very concentrated. Now, the problem is that there are also changes on the way banks have to account for their capital. And without going into kind of like the complexity of bank regulation, but it becomes less attractive for banks to fund trade finance. It's a very low risk asset class because it has a close link to the commercial transactions. Again, coming back to kind of like the seller and the buyer we had before. Obviously, you continue as a seller, you continue on to sell to your buyer because you're making a commission on that, or you're making some money on it. So you have no interest, for that buyer to default. And you will be very accommodative, to help that transaction. Or if you take an airliner which is in trouble, they will still pay for their kerosene until the very last minute, because if they don't, they can't take off and the company is no longer there. So it's probably the safest financing form you can find for corporates. So pain point, coming back to your question, and apology for the little discourse. But what the banks need to do is they need to find ways to have capital markets and retail to participate. Now, capital markets, these are large pension funds, insurance companies, large asset managers, which are professional investors and always are looking for good assets and yield. And they are looking now to get access to these bank trade finance instruments. The problem which we had so far is that you have tens of thousands, millions of these, small receivables. These could be amounts of £10, $10, a million. But these are very granular pools, and they keep revolving. So there's a lot of, if you want to do this on an Excel spreadsheet, it's pretty much not possible to do it in large scale. So what we are doing is we are automating these workflow processes, and that means that we now have, in an off-chain world, we can process lots and lots of these instruments and make those available in a repackaged form. And we come to the repackage in a second. That's obviously the tokens, where we can now provide an easy investable instrument and make it accessible to anyone, retail, but also larger investors in the crypto space.
So you're backing the token with the real world asset, which is the invoices, which have those payables on a 30 or 60 day out basis. And you're telling me that those payment loops are, everybody's helping to continue keeping them, because it's required of everybody to be successful for everybody to get paid, basically. Yeah, I like it a lot. So the tokenomics, and does the token have, it has a name?
Yeah, that's right. Yeah. So the token is called TRADA token. And it obviously the benefits for the investors is that we have the usual benefits. We have fractional ownership. So a retail investor today will have no chance to purchase a well-diversified pool of originated invoices. That would just not be possible. You could go and potentially buy one instrument, but as a retail investor, what view would you have about one particular invoice? In contrary, I would be very suspicious if someone offers me one invoice. I would think, I'm probably out of all the trillions of invoices out there. Why is someone offering me exactly this invoice? So what you want is you want to participate in a pool of hundreds of millions, ideally, of invoices, very well diversified across all jurisdictions. And you want to also have atomicity in the way the settlement is done. Now that's maybe, it looks like a small point, but it's actually quite a big deal. And large asset managers today, they have access to so-called central security depositories. So these are central, kind of like institutions which are eliminating the counterparty risk between all sides. And those institutions have existed for ages, and it's now possible to actually, even for a $50, $100 investment, to get exactly the same service and the same risk reduction, such that do not have any counterparty risk between two parties transacting on such a token. So that has a tremendous value. So it's really that fractional ownership. I think it's access to trade finance in general, and it's also that atomicity and that elimination of any counterparty risk, which is a huge benefit here.
So if I understand correctly, then you've got a basket of invoices, and those basket of invoices are spread across a lot of local, it's not just one country, it could represent 10 countries, is that right?
Absolutely. Since if you think about, any financial asset out there, obviously has some vulnerability, and very often even a currency, right, can be somehow manipulated theoretically by a government. Well, not theoretically, it obviously can be influenced by the central bank of a government or economic region. If you look at trade overall, then what it does reflect is the true value of where people, real people, kind of like in average consume goods. You cannot inflate the price of coffee, since no one goes and buys a cup of coffee for $100 per se.
Maybe in Tokyo.
There is someone, but
just checking, yeah.
So it's the average of these prices which kind of are the underlying of that transaction, and that's fundamentally different to other markets like we have seen in the credit crisis in 2006, 7. Florida condos getting artificially, kind of inflated. That is not really possible here, because it's what you and I consume every single day, ultimately.
So so the basket of invoices representing lots of currencies, and then a token represents a fractionalized portion of that basket. Is it always set the same? I mean, I know the token price will probably fluctuate, I would imagine, but does the percentage of what that token represents of that basket of invoices, does that change, or is it just and is it in the form of an NFT? Did I read that properly?
Yeah, so we have done 2 NFT transactions already, and we started by having a static pool of invoices. So we just took, I don't know, a few hundred invoices, and we turned those into an NFT. The reality is here, obviously NFTs are cool, and we want to prove the concept, and it was one investor, and therefore it made sense. What we want going forward, obviously we want high tradability, but also fungibility. So yes, your token should be as good as my token, and going forward, these will not be NFTs. We have done another NFT, which was on the basis of a revolving pool, and that will then also be how the Troda token works. So you have to think in terms of, I don't know, let's just say an amount of X, that's the overall pool size, and every time there is availability in the kind of cash in the off-chain world, then there will be new invoices uploaded into the system, and the system will check whether those invoices are eligible. By and large, we're looking at insured exposure. So it's not just that these are kind of invoices. They will also have, in many cases, will have a third-party credit insurance to make them extra safe. And in other cases, we will do a machine learning based credit analysis where we feel very comfortable that we have enough data that we can do it. And as such, this pool continues to revolve on an ongoing basis, and whoever owns the token will own a stake in that pool which obviously keeps revolving per se, but is highly diversified.
I got it. So I understand it now. Yeah, I think it's an amazing business model. I really think it's awesome. There's going to be a lot of benefits on the small SMEs. There's going to be a benefit on the person who's the token holder. It's going to be a benefit for those people who never could participate in this sector before. I mean, it's really, really great. Well, I have another question. Is the token supply, does it have a max, or how does the tokenomics work for that? The circulating supply.
Yeah, so this is a token which really is almost like it's an investment product. So the idea is that you are investing, and we target really super safe underlying collateral, and there is some yield. So that's different to non-yielding stable coins or anything. So this is a real investment product, and we will pay on an ongoing basis, and is not a guaranteed X% coupon. It will pay whatever the underlying pool essentially generates. Will create new tokens, and therefore whatever you hold as a token at all times always should have a value of at least 100 collateral.
I got you. So it's really a financial instrument more than anything else. I got it. So
it's fully regulated,
yeah,
that part, because you cannot do it. It's a security, right? And that means also there is supervision on the reserve pool. We cannot hide this. We cannot have a kind of a no-name auditor or something look at this. So there are real counterparties certifying, that everything is in order and it's subject to the securities law. It's just the form is one which now is able to create all these benefits, the technology is essentially providing. The technological infrastructure is built such that it allows for high transaction frequency. It's very low processing cost. So it has all the right features. So this is really kind of like they are focused on trade finance and us doing nothing but trade finance. It was just a perfect fit. In terms of any project which runs on their infrastructure, yes, absolutely. I think that's the idea of an ecosystem, to leverage each other and building on it.
In this case, it'll settle through an atomic settlement, and it'll be tied to a smart contract. Yeah,
absolutely.
I got it.
Yes.
Yeah.
Yeah, so there will be a dedicated website which will be released. It's completely finished, everything. So once we have the regulatory approval, we'll release the website. There will be a white paper on it. There will be all the prospectus, all the information of the securities offering underneath, all the regulatory filings. Everything will be available there. Other than that, obviously, we are quite active in the trade finance distribution initiative. That's an initiative where the XDC network is also very active. There are more than 60 large financial institutions are part of this. It's not just obviously crypto. Crypto is one part of it, but a lot is also completely off-chain distribution. But it's a community which wants to make this work, and use whatever is at their disposal to create this this flow of trade finance between buyers and sellers. So that's another. There's the TFT Initiative website, which is a good place to look at. And then also we have on Tradeteq we have quite an extensive news page where you can we can find quite a few information as well.
And I think that the opening up to democratize into the retail investor to be able to participate is fantastic. You know, I really am pleased that you came on. Anything you want to tell us to be sure that I didn't miss that you want to have everyone know for sure?
I think you asked me everything. I'm running out of ideas, but thank you so much for having me on the show.
Yeah, it's very fun. Like I said, you're the very first trade finance. I've talked to many, many people in the space. You're the very first trade finance focused blockchain token project that I've talked to. So I think it's fantastic and it's super exciting. And congratulations for getting this far.
Thank you.
Yeah. All right. Take care, Chris. We'll talk to you soon. We'll check in with you and see how you're doing real soon. Thanks.
Thank you so much.
Bye-bye.
Bye.